Welcome everyone. Good morning. Let's start today's lecture. So today what we are going to do is we will be covering the last two clauses of the CARO, okay, that were pending, and then we'll go to the next topic, that is audit committee and LODR regulation. Okay. So just a quick recap of the last lecture. What we discussed is we discussed various clauses of para 3 of CARO 2020. Various clauses of para 3 of CARO 2020. So remember something we discussed about cash losses, statutory auditors resignations, registrations with RBI, non-cash transactions, internal audit, transaction with related party, nidhi companies, fraud reporting, then application of money raised by public issue, repayment of dues, it was the liability side, undisclosed income, statutory dues, cost records, compliance related to public deposits, complaint to the provision of 180A5 and 188 section of Companies Act, loans and advances, inventories, and the first clause was property, plant and equipment. Most of the things, or you can say some items from these reportings were directly linked to the financial statement reporting. We discussed that also in the last lecture. Remember that we cross-reference, okay, what is the reporting in the financial statement, what is the reporting in the CARO. Clear? So that was we discussed in the last lecture. You can ask any doubt with respect to like whatever last lectures were there with respect to any of the topic. If it is related to the topic, again I will be happy to consider during that session itself. If something it's there that which is not related to the topic, I'll try to cover it at the end of the lecture or in the just before the break, or some at the appropriate time. That will help us out and will not disturb the flow. Okay, so let's then move to the subsequent clauses. Okay, para 20, clause 20 of para 3. This talks about unspent CSR. Okay, now compliance with section 135(5), compliance with section 135(6), or there are provisions of 135(5) and 6. So this talks about that compliance. So there are two things in this particular clause we are required to report upon. First, for the ongoing projects, okay, for the ongoing projects, whether the company has appropriately complied with 135(5) of Companies Act. Okay, so compliance with section 135(5), and second is compliance with section 135(6). So what we are required to provide over here is whether in respect of other than ongoing projects, the company has transferred the unspent amount of a fund that was there for this for these projects. Okay, within the period of 6 months from the expiry of financial year, whether they have transferred or not. So whether the company has transferred the funds this will be for in respect of other than ongoing projects. Okay, within period of 6 months from expiry of financial year, or you can say from end of financial year. Okay, so whether the company has transferred the funds within period of 6 months from the end of financial year, yes or no. This will be for other than ongoing projects. Okay, now as per 136 and 135.6, we are required to provide that amount remaining unspent. This amount, okay, amount of 135.5 remaining unspent, okay, pursuant to any ongoing project has been transferred to a special account in compliance with 135.6. So if there is amount unspent, then whether that amount has been transferred to a special account. Just a minute. So whether this amount for pursuant to any ongoing project, till now in 135.5 we are talking about other than ongoing projects. Now here it's ongoing project. So amount unspent transferred to special account. Okay. Now this will be for ongoing projects. So if so under this para we are required to verify two things: compliance with 135.5, compliance with 135.6. 135.5, other than ongoing projects, transfer the fund within 6 months from the end of financial year. 135.6, check the amount unspent, whether it has been transferred to special account for ongoing projects. Simple. Okay. Then the last clause, and the clause which is also important and applicable to consolidated financial reporting. So this is the only clause which is applicable to CFS. Okay. So what we are, what the particular clause of para 3 says that, okay, this clause says that whether there have been any qualification or any of the adverse remark, okay, or any of the comment by the auditors of that. When I say this is applicable to the consolidation, so we are as of now talking about a company which is which is going to get consolidated. So for example, let's say subsidiary. So we are talking about subsidiary company. Okay. So any qualification, adverse remark by the auditors of those subsidiaries, okay, have been reported, have been reported, and if yes, if there are any adverse remarks or qualifications, okay, then the details of the companies, the paragraph numbers of that particular point of that report requires to be mentioned over here. So if there are any qualification or adverse remarks by the respective auditors, okay, in their CARO, then we need to indicate the details of the companies, in which company, which is the remark. Let's say for example, there are 10 companies which are consolidated. In company number 2, this was a qualification, okay, in this paragraph number of the CARO report, okay, this was the adverse remark. That's it. These things I'm required to provide over here under this clause. So let's say, for example, A Limited holding, and it is preparing consolidated financial statement. It is consolidating B, C, D, E, F. Okay. Now let's say under B, 312, 313 are the qualifications. Here there is no qualification. Again, no qualification. Again, no qualification. Here, let's say 3.1 and 3.2 qualification. Okay. Now, what will happen is when we are preparing, CFS, CARO for the CFS, only one clause will be used, only one clause will be reported. Only one clause that will be reported for CARO, rest all will be not applicable. So that is one clause. Para 321. Under that we will mention that in company B, 312 and 313 one negative or adverse or qualification. Under company F, 3.1 and 3.2 were qualification, adverse or comments. Simple. Like this way we will be reporting under the consolidated financial statement. On the consolidated financial statement, only one paragraph, that is 312 para 3 clause 12, wherein we will be providing details of the qualification which are of the subsidiary companies or whose financial statement are being consolidated over here. So provide details of adverse / qualifications in CARO of CFS. When I say details, okay, when I say details, what you are required to provide is para number, then company name, and if possible then you can also provide description. So these are the three details that are required to be provided for adverse or qualifications in CARO of CFS. Clear? Any doubt till now? Any doubt, guys, with respect to the CARO or any of the clauses? Because no issues, fine. Do let me know if you have any doubt. I can take up into the during the session or at the end of the session. Okay, no issues. So guys, this was CARO, wherein we have to like CARO 2020, there were amendments. This was a new point. We discussed how to interpret the clause, why they are important, and how to even answer. Remember in previous lecture we discussed one of the example wherein how a question can come, how it can correlate multiple clauses together, and how you need to answer. Okay, these were the 21 clauses of para 3 of CARO. Now there is one more paragraph in CARO in that particular order that talks about, that is para 4. Now what para 4 talks about? Para 4 is regarding your adverse comments or qualification. Okay, what paragraph 4 says that whenever you have an adverse comment or qualification, you need to provide the reason thereof. Explanation. So provide reason and explanation for your qualifications. Oh, sorry, screen was blocking. For your qualifications and adverse comments. That's it. So you need to provide details of qualifications and adverse comment. Any doubt? Any doubt? Okay. Also, wherein, okay, just a minute. No, Jay. Okay, so para 4, okay, good question. Whether para 4 and that CFS reporting is same, answer is no. When I say para 4, it's for the individual CARO reporting. Let's say, for example, we are reporting for the B entity over here. Now there are 2 adverse comments in B entities or qualifications. Over there we are required to provide reason, and that is as per paragraph 4. But when it comes to the CFS, we are required to report in paragraph 3 clause 21 the details of adverse comments of the subsidiary. So there is difference. When we are talking about individual CAROs, you need to provide qualifications, explanation of those qualifications for each of that qualification which are mentioned in the CARO. And in case of a consolidation, only there is one paragraph, that is 321, which talks about, okay, provide the qualifications of the subsidiaries, or you can say the entities which are being consolidated over here. So both are different. Okay, now there is second point to paragraph 4 which talks about, okay, when an auditor is not able to provide any of the opinion or any of the comment on this particular and on any of the particular clause. So whenever, like, auditor is not able to express any opinion, let's say for example we are not we don't have the data, we cannot comment. Okay, so if the auditor is not able to comment, then the auditor needs to provide explanation that, okay, why it is not possible for him to give a comment or to give his opinion. So if auditor is not able to provide opinion, then he needs to provide explanation for same. Okay, so if I'm not able to provide any opinion on any of the clauses, then I need to give the explanation why I'm not able to provide the opinion. Clear? Any doubt? Jay, I hope your doubt is clear. Thank you, Sairam. Any further doubt, guys? This was CARO 2020 that we discussed. Okay. Now moving to the next topic for today, Audit Committee and LODR. Why this topic is important? See, before starting any topic, always remember that there is some background behind the topic. Okay, there is some background why you are required to study, or why there is requirement to study for this topic. What is from the audit point of view in this topic? So always learn that particular area, or understand that area. Okay, why this is important. And once you understand that area, then only it will become very easy for you to to understand, okay, what are the things that we are looking over here. Okay, so under this topic, what we are going to do is I'll provide you a summary first. So there are two things in this. What we are going to discuss is, first, we are going to discuss about audit committee. Now, audit committee can be here under LODR. Audit committee is also applicable as per Companies Act. Okay. So first we'll discuss about, okay, audit committee. Now, why audit committee? Because it is linked with my corporate governance. Okay. Now, for corporate governance also, there are specific regulations of LODR that we will see. Okay. So we will see those regulations of LODR which are with respect to the corporate governance. So for example, that will be code of conduct. Then you can say vigil mechanism. Then you can say compliance certificate. Okay. Disclosures, committees, that there will be a risk committee, nomination and remuneration committee. So we will discuss about committees. Okay. Then so these will be some LODR, corporate governance points, regulations. Okay. Now, why we are referring to the corporate governance or audit committee? What is the need for that? Okay. So understand. So we are talking about this whole because there is a compliance verification required. Okay, compliance verification, or you can say certificate on corporate governance. So there are certificates which are required to be provided, certificate of compliance on conditions of corporate governance. So that is certificate of compliance on conditions of corporate governance. This is a certificate that is required to be issued to the company. Okay, this certificate is required to be issued to the company. Now, there are two people. You can say persons who play an important role in this certificate. One is the auditor, and another is the audit committee. Okay, so that's why we will be understanding the audit committee, their roles, responsibilities from the Companies Act and LODR side, their role in this certification. Number 2, auditor's role in this certification. Number 3, this certificate is on corporate governance. So we need to understand what is corporate governance, and this certificate is required as per LODR. Okay, this certificate is required as per LODR. So then, what are the principles of corporate governance, or conditions of corporate governance? We need to understand that also. So this is a particular thing that we will be learning, discussing in this topic. Okay, responsibilities in certifying compliance with the requirement of corporate governance of auditor. Same way, what is the role of audit committee? Okay, what are the conditions of corporate governance? Okay, now this certificate that we are talking about here, okay, under LODR, this certificate is neither a audit or nor an expression of opinion on financial statement. First of all, this is not an audit, neither expression of opinion on financial statement. Okay. This certificate is neither assurance to future viability of the company. Okay, nor it is commenting upon, it is commenting upon efficiency or effectiveness, efficiency and effectiveness, sorry, of management. So I am saying this certificate is not an audit. This certificate is neither expression of opinion on financial statement, neither assurance to the future viability, nor it is commenting on efficiency and effectiveness of management. Then what this certificate is about? This certificate is about whether the conditions mentioned in LODR with respect to the corporate governance has been complied with or not. They have nothing to do with my financial statement, or they have nothing to do with my audit opinion. They have nothing to do with my future viability, or neither they have anything to do with efficiency or effectiveness of management. Reason, because let's say for example today there is a condition of corporate governance that you should have this much of independent directors. Now, okay, I say the company has complied with the conditions of independent director in board. So board have half of the independent directors, condition complied, everything good. Is it audit? No. Is it an expression of opinion on financial statement? No. Does it ensure that the future of company is good because there are half of the independent directors? No. There is no surety. Okay, there is no assurance on future viability. Does it ensure the effectiveness and efficiency of the management is now good because they have independent directors? Answer is no. Unless and until we go and see the actual efficiency and effectiveness, we cannot comment. Only by being the independent director there cannot be efficiency and effectiveness. So this comment or this certificate is neither a audit, opinion, future viability assurance, or comment upon effectiveness or efficiency. Clear? Okay. Any doubt? So this is a certificate that is required to be provided. Now, sorry. This compliance certificate is either can be obtained from auditors or practicing company secretary. Okay, can be obtained from. Okay, can be either obtained from auditors or practicing company secretary. This certificate. Now, if it is obtained from auditors, then being an auditor, I should be aware. Okay, what I am required to comment upon, what I am required to see, and what I am required to mention in the certificate. That is the thing we are going to learn now. Okay, good. So, going back to the topic, that what is covered under this particular area. Now, going to the details of the corporate governance, understand what is corporate governance. Now, corporate governance is a system by which management, is directing and controlling the activity in the best interest of the company. Okay, so there are some practice that they need to follow, or there are some guidelines they need to follow. Okay, in order to be efficient and be effective and to address the needs of the stakeholder. That's it, something related to the corporate governance. Now, there are certain issues already addressed in LODR regulations, okay, regarding corporate governance. That is the responsibility and functions of board, code of conduct, vigil mechanism, we'll see. Okay, so it's already there. So these are the things which are given in the corporate LODR regarding corporate governance. Okay, responsibility and key functions of board. Okay, its composition and disclosures, code of conduct and vigil mechanism that we already mentioned above. Okay, compositions of audit committee. So when I say committee, it will also include my audit committee. Then management of subsidiary companies. Procedure related to risk management. Okay, disclosures on important issues regarding related party transaction disclosure. Okay, management discussion analysis, information to shareholder, compliance certificate by by CEO and CFO. Okay. Now see, this compliance certificate by CEO and CFO is different than this certificate on compliance. Okay. Compliance certificate and certificate of compliance on condition of corporate governance, two different things, two different certificates. So don't combine them. Okay. So these are certain conditions which are addressed in LODR. Now, before going to these conditions one by one, let's understand to whom these conditions are applicable. So we will be talking about applicability of corporate governance conditions of LODR to the companies. Now, to which company the applicability is there? Like to this will apply. Regulation 3. Okay. I'll write it in short form reason because it will help to understand. Okay. Regulation 3 of LODR regulations talks about applicability of LODR. Okay. Now to whom it is applicable? Unless provided otherwise, it is applicable to all listed entities. Okay. So it is applicable to entities who have listed their securities on their stock exchange. So it is applicable to listed entities. Okay. Now, when I say listed entities, what they have listed. So, for example, I can list debentures, I can list, you can say equity shares, I can list non-convertible debentures, Indian depository receipts. There are various things which I can, list on my stock exchange. So, what is the thing that is, there for listing? What is the thing that will be there on listing? Okay, so there are details mentioned or specified in LODR that it should be specified securities, okay, on main mode or SME exchange or innovators growth platform. Second, non-convertible securities. Now this is the amendment. Earlier it was not there, now it is there. Indian depository receipts, securitized debt instrument. So securitized debt instrument, then security receipts, then units of MF, mutual funds, and any other security specified. Okay, so other securities which are specified. So if you have these securities listed, then the LODR is applicable to you. Okay. So there are now two amendments to this particular application clause. One was earlier, let's say for example, there were limits defined for the market capitalization. So now let's say for example, so top 500 and 1000 companies were there to whom this was applicable. Okay, Now let's say you are in one of the top 1,000 companies today. Tomorrow you are no longer into the one of those top 1,000 companies. Then what? Then so tomorrow no longer part of top 500 and 1,000 companies. Okay, today you are here part of, sorry, so today you are part of top 500 or 1,000 companies. When I say top 500 or 1,000, this criteria is based on market capitalization. So I calculate, okay, based on market capitalization, what is top 500 and 1,000 entities. So today, if I'm part of top 500 and 1,000 entities, and tomorrow, if I'm no longer part of that, still these regulations will be applicable. Still, these regulations will be applicable. Okay. Why? Reason because there is an amendment which talks about the provisions of these regulations will become applicable to listed entities. Okay, will become applicable to listed entities on the basis of market capitalization criteria shall continue to apply to such entities even they fall below the threshold. Now, if these regulations were applicable to you when you are top 500 or top 1,000 companies, they will still apply to you if you fall that criteria. If you are, now not part of top 500 or top 1,000 companies. Second, these conditions are applicable in case of, listed of debt securities. So these conditions are applied when regulations are applicable when outstanding listed debt securities are greater than rupees 500 crores. Okay, when your outstanding listed debt securities on any stock exchange, okay, are more than 500 crores, these regulations are applicable. Now let's say tomorrow your outstanding listed debt securities less than rupees 500 CR. Now it falls below that 500 CR. So will these regulations still apply? When I say regulations, we are talking about portion of the corporate governance. Okay, will these regulations still apply? Answer is yes. These regulations will still apply even when company falls below the outstanding listed debt security limit. Okay, this will apply even when the limit falls below 500. Once applicable, then it is applicable. Okay, so once the regulation of corporate regulations related to corporate governance are applicable, then they will be applicable even though you are no longer part of that group. So these both were amendment. Okay. Now this we were talking about applicability of LODR. Any doubt? Jay, can you rewrite your question on fraud reporting under SA 240 and CARO? So I just can understand what point you want to understand in these both. Okay. Any doubt related to this topic also? Audit committee, LODR, corporate governance. Okay. No issues. Let me move forward. Now, this was the application of LODR. Okay. Now we understood to whom the LODR is applicable. Means application of LODR regulations related to the corporate governance. Okay. Now, when I talk about corporate governance, we saw that in the case of corporate governance, there are various things: code of conduct, vigil mechanism, compliance certificate, disclosure, committees, and in that we'll discuss one by one each item. So these are the conditions of corporate governance that we are discussing. Conditions of corporate governance. Okay. Under that, what we are going to first see is audit committee under LODR. Understand what are the requirements of audit committee, what are the provisions, what are the compositions and details of audit committee mentioned under LODR. Okay, this will be my regulation 18 of LODR. We'll see which are the things that we are discussing, what are the regulations. Okay, now as per LODR, the audit committee should be qualified and independent. Now what do you mean by qualified and independent? Let's see that. So as per LODR, audit committee. Okay. Now as per LODR, audit committee shall have minimum 3 directors. Okay. So it should have minimum 3 directors. Understood? It can go maximum, but minimum 3 should be there. Out of these 3 or minimum directors which are there, or out of the directors that are there in the audit committee, 2/3 members of the audit committee shall be independent. Okay. And if there are superior rights of equity share, then audit committee shall only comprises of independent directors. Okay. Now first thing, so whether SR equity rights present, SR not present. So going forward, I will use SR means superior, okay, rights of equity shares. Superior rights of equity shares means you have a higher rights, you have a more rights compared to the normal equity shares. So if a company have superior rights on equity shares, okay, if they have certain kind of equity shares available, then out of this audit committee, all directors, okay, all directors should be independent directors. First of all, I said, okay, audit committee should be made of directors and at least 3 directors should be part of audit committee. Now I'm saying that, okay, if the SR equity rights are present in the company, then all directors which are part of audit committee should be independent. If SR equity rights are not present, then what will be the cases? 2/3 should be independent director. Clear? If SR present, then full. If SR not present, then 2/3 directors should be independent. And out of these, at least one member shall have accounting related or financial management related expertise. So what is required is audit committee should be financially literate. That is, they should have the knowledge of reading financial statement, P&L, balance sheet, profit and loss account, and some related to accounting things, understanding of accounting things. Audit committee should be financially literate. And second, at least one member should have accounting and finance management expertise. Okay, accounting and finance management related expertise. These are the requirements of LODR. Okay. Chairperson. Okay. Chairperson of the committee should be an independent director. And company secretary will act as a secretary to the committee. Company secretary will act as a secretary to committee. Okay. Now, this was related to the qualification and expertise of audit committee, qualified independent audit committee. So this whole regulation 18(1) we are talking about. Okay, now once you have, okay, how audit committee should be formed, when audit committee will meet, meeting of audit committee. Okay, audit committee shall meet at least 4 times. So meeting at least 4 times in year. Okay, and not more than 120 days between 2 meetings. So let's say meeting 1, meeting 2, meeting 3, and meeting 4. So between them, this gap should not be shouldn't be more than 120 days. Okay. So gap between two meetings should not be more than 120 days. Gap between two meetings should not be more than 120 days. Clear? Okay. Now, once they meet, then the quorum should be either 2 members or 1/3. So quorum of that particular quorum should be either my 2 members minimum, okay, or 1/3 members. but out of these 2 members or 1/3 member, there should be minimum 2 should be independent directors. Okay. So when I say quorum 2 members, either these 2 members should be independent director, or either out of the 1/3 it should be independent director. Remember, whenever I am using 1/3, 2/3 or any such fraction, okay, and if the answer of that fraction is coming in decimal, round it off to the next number. Let's say, for example, 1/3 is 3.5 or 3.89. Now I cannot present, a person cannot be present of 0.89 fraction in the committee. He has to be either 1 or 0. Okay, so I cannot have a 3.89 members, so I need to round off to the 4. Okay, any doubt? Sinam, top 500 companies based on market capitalization. So companies who have top 500 market capitalization, those are top 500 companies. Jay, can you rewrite your question on 3 provisions: applicability, LODR, market capitalization, listed debt securities greater than 500 CR? Jay, superior rights means the rights, let's say, for example, you have additional rights in the equity shareholder, let's say veto power or something like that. It can be any type. Yes, Jay. Audit committee is specified under LODR. So your question was whether the audit committee regulations are there in LODR. Answer is yes, because regulation 18 of the LODR regulations provide details on the audit committee. Srinidhi, so very good question. Is there any maximum limit for number of directors in audit committee? Srinidhi, the maximum limit will be the number of directors present in the company. Okay. Any further doubt, guys? Okay. Now, what are the powers of audit committee? Powers of audit committee are to investigate any activity, to seek information from employee, to obtain legal and other professional advice, and to secure attendance. Okay, these are certain powers of audit committee, and it should be that these are the illustrative one. Okay, not the exhaustive list. So powers are mentioned under regulation 18.2, which are just a illustrative, not exhaustive list. They are illustrative. Clear? Okay. Now, additionally to that, regulation 18.2, there is another requirement for the audit committee. That is role of audit committee. Now, role of audit committee is specified in part CA, of Schedule 3. Okay, this is not the Schedule 3 of Companies Act. Remember, this is not the schedule of Companies Act. This is the schedule of LODR we are talking about as of now. Schedule 3 of LODR. Don't go to the Companies Act Schedule 3. No. This is part C bracket A of Schedule 3 of LODR. Roles of Audit Committee. Now, when I say role, what is the role? Role means what are the functions of Audit Committee? What is Audit Committee required to do? You need to understand what. Then only you can say whether the conditions of corporate governance are complied or not. So, what is the role of Audit Committee? Simple, pretty simple. First, oversight of financial reporting process means the reporting is appropriately happening and not, plus disclosures of financial information, disclosures in financial statement, plus correct financial statement are correct or not. Second, recommendation of auditors. Remember, in Companies Act, we saw, okay, board of directors are required to take recommendation from audit committee regarding the appointment of auditor, recommendations of auditor for appointment, recommending them for remuneration, terms of appointment, okay, approval of payment to state auditors. So once the audit committee approves the payment to the state auditors, then only it can be paid to auditors. Then reviewing annual financial statement with management. Okay, and what they will see in that is, when I say financial statement, can be very big thing. Okay, or let's say annual report, which will include my director responsibility statement, changes in accounting policy. Then you can say major accounting entries, significant adjustment, compliance with other legal requirements, with law, related party transaction disclosure, and modified opinion in audit report. So when I say reviewing annual financial statement and annual report, that means they will see director responsibility statement, changes in accounting policy, major accounting entries, significant adjustment, compliance with law, related party disclosure, and modified opinion in audit report. Reason because they also will be having restricted time, so they will not be able to verify each and everything. So this is a minimum they should verify. If they have time, you can verify further also, but this is the minimum the audit committee is required to verify in annual financial statement. Then they are required to review quarterly financial statement. Okay. Review statement of use slash application funds. Now, when I say funds, these are the funds raised through issue of securities. Let's say, public issue, right issue, preferential. So these are the funds raised through issue. Now, audit committee is required to review statement of use and application of those funds. And we mention in prospectus, company mention in prospectus for which purpose they are raising the funds. Review of auditors' independence. Review of auditors' independence and effectiveness of audit process. Approval of subsequent modification. When I say subsequent modification of transaction, okay, if there is a subsequent modification in some of the transaction with related party, then yes, your approval is required from audit committee. Review of inter corporate loans and investments. Valuation of under assets. Review of valuation. Review of internal audit function, if they have. Okay. Then review of my internal financial controls. Review of performance of auditors. This, when I say auditors, it will be stat plus internal auditor both. Then review of any significant findings by stat auditor. Review of findings of investigation, if any, going on. Understanding the reasons of default, if there is any. functioning of whistleblower mechanism, approval of appointment of CFO, so CFO's appointment approval, other function, then reviewing of utilization of loan, and last is consider and comment on rational, cost benefit and impact of schemes. So 3 things. Consider and comment. Okay, consider and comment on rational, cost benefit and impact. But what? Of what? Of schemes. When I talk about scheme, means can be merger, arrangement, can be merger scheme, demerger, amalgamation, and various schemes that can be there. So consider and comment on rational, cost benefit and impact of schemes. Now that is amendment, which was not present earlier. Now it is a part of the role of audit committee. So this was a comprehensive role of audit committee. Okay, comprehensive role of audit committee, you can say. Clear? See, Vidula, there are two parts of it. One, management needs to ensure the compliance of these regulations. Number 2, if auditor is giving a certificate on conditions of on compliance of conditions of corporate governance, then auditor needs to verify whether these details are there or not. Yes, Kuldeep, good question. Whether maximum number of directors will include additional director also. See, maximum number of directors are something which is governed by the Companies Act. As of now, there is nothing mentioned in the LODR with respect to the maximum number of directors. So the provisions of Companies Act will prevail, okay, when there is nothing mentioned in the LODR. Jay, when they are reviewing, the actions they need to take is understand what is the underlying data they need to review. Okay, let's say for example, if I want to review the scheme of merger, then what are the scheme that I'm going to review? What are the critical areas of that scheme? What was the reason that scheme was taken? As it mentioned, the rationale, the impact, cost benefit analysis. Okay, whether the scheme is feasible, financially feasible. What is the tenure of the scheme? Who has approved the scheme? There are various things that are that will include in the review. Good question, Srinidhi. So Srinidhi, you have a question that how to remember these 21 roles of audit committee. Simple. I'll say, but it may appear that you may not think it appropriate, but again, to remember these 12 functions of audit committee, understand the functions. What is the purpose of audit committee? Why we have an audit committee? You understand that purpose, you will understand the role of audit committee. It's nothing different. So today, if I have made a committee, then there is some purpose in my mind. Okay, why I'm defining this committee? This committee is related to audit committee, the name suggests. So it has to review each and everything with respect to audit report, significant findings in the audit report, financial statement. So financial statement with director's responsibility statement, major accounting transactions, accounting policy changes, okay, internal audit function, internet financial controls, performance of statutory auditor. There are some legal requirements like, recommending appointment of statutory auditor, remuneration of statutory auditor, approving the appointment of CFO, okay, approving subsequent modifications of transactions at a related party. So these are some legal requirements. Then again, reviewing the valuations, investigation, whistleblower. So if you understand the purpose of the committee, it will be easy to learn. Trust me. Hardly there will be 1 or 2 points that may not be able to recall. But if you have understood the purpose of the committee, you will be able to learn easily. Okay, good question, Jay. LODR are the separate regulations issued by SEBI. Okay, LODR are the separate regulations issued by the SEBI. Now, when I say LODR, what is LODR? LODR stands for LODR stands for listing obligation and disclosure requirements. So whenever a company lists its equity shares on any of the stock exchange, they need to comply with the listing obligations and disclosure requirements issued by SEBI. So SEBI LODR regulations are the one that we are talking about. They are issued by SEBI and they are different than the powers. They are different than the Companies Act. Okay, thank you. Yeah, moving ahead. Okay, we saw the functions of LODR. Now, there was a specific circular on resignations of state auditor. Okay, there was a circular issued on the resignation of statutory auditor in October 2019. Now, what was that circular about is there are some already regulations on the resignations of the auditor, but there are certain additional requirements which were issued through a circular. We'll understand those requirements. So this was the roles of audit committee. Now, yeah. Okay. We are talking about resignations of statutory auditor. Now, as per regulations of SEBI LODR regulations, okay, in case an auditor resigns, then detailed reasons of resignation are required to be disclosed by listed entity, okay, by listed entity to stock exchange. Okay, these detailed reasons of resignations are required to be disclosed to the by the listed entity to stock exchange. Okay, what is the time limit for this? Time limit is within 24 hours 24 hours of receipt of such reasons from auditor. As and when auditor gives, within 24 hours, company needs to submit these reasons to the stock exchange. Okay. Then there were conditions mentioned in the circular. I was talking about the circular. So each and every company, each and every listed company, my mistake, listed company, listed entities plus material subsidiaries are required to ensure compliance of below conditions while appointing / reappointing auditor. So whenever listed entity plus any material subsidiary of the listed entity are appointing or reappointing an auditor, they need to ensure the compliance of below conditions. Now these conditions are, okay, if auditor resigns, within 45 days from end of quarter, after 45 days from end of quarter, okay, if auditor has signed limited review / audit report of first 3 quarters. Okay, so circular specifies 3 criteria. Okay, if auditor resigns within 45 days, after 45 days, or has signed the limited review or audit report of first 3 quarters, then if auditor resigns within 45 days from the end of quarter, then before issuing such resignation, auditor is required to issue limited review or audit report of that quarter. Okay, so limited review or audit report for that quarter, auditor is required to issue. Okay, now in case if he resigns after 45 days from the end of quarter, then before resignation, issue limited report or audit report, limited review report or audit report of current quarter, means which has been, which has now gone, and after 45 days of this quarter is, auditor is resigning. So let's say auditor is resigning after 45 days of your September end. So September quarter is gone. So auditor is before resigning. If auditor is resigning after September, 45 days from the end of September, then auditor needs to issue audit report or limited review report of such quarter plus limited review or audit report of next quarter. If auditor has already signed limited review and audit report of first 3 quarters, then before resignation, issue last quarter audit report or limited review report plus issue audit report on annual financial statement. So if auditor is resigning within 45 days from the end of quarter, for example, let's say auditor resigned on 11th August 2021. Now this is within 45 days of the end of quarter of, here quarter we are talking about September end, September 2021 September 2021 quarter, September end quarter. So if auditor has resigned on 11th August, then he needs to issue audit report of, issue limited review or audit report of September 2021 quarter. Okay. If he resigns on, let's say, 10/12/2021, then issue September 2021 plus December 2021 quarter audit report or limited review report. Okay. Now, if he has signed 3 quarters audit report or limited review report, then issue audit report on the last quarter also and issue audit report on the financial statement also. Clear? This was a circular requirement if auditor resigns. Now, in this case, who is required to comply with these provisions? Company needs to ensure before appointing or reappointing. Let's say, for example, if auditor has resigned on 11th August 2021, before appointing any of the auditor, I need to make sure that auditor who has resigned on 11th August 2021 needs to issue limited review or audit report of September 2021 quarter. Same way, in each of the cases, the company needs to ensure these requirements. Now, if company is ensuring these requirements, then only it can be said, okay, company is complying with the conditions of corporate governance. This is one of the part of the conditions of corporate governance that company needs to ensure. Okay. And it is affecting the auditors also. So it is two-way round. Any doubt till now? Any doubt? Guys, please provide your feedback. It is very important for me and very important for us over here to understand whether you are able, whether you are liking the lectures, what additional things you want. Please provide your feedback so that we can deliver you more appropriately and we can deliver you in more comprehensive way that the way you want. Okay, your requirement, your understanding is very important for us. Please provide your feedback. Okay, at least let me know that whether you are liking the lecture, you are understanding the lecture or not, so that it helps me also just to make sure, okay, I'm going on the right path, you are getting the things correctly and appropriately. Jay, company has listed companies have the option to either issue audit report or limited review report for the quarterly financial statement. So as per LODR regulations, okay, each and every listed company is required to publish its quarterly, or you can say financials, quarter financial or quarterly numbers. So once they publish quarterly numbers, they cannot be either only or unaudited. They can either be limited reviewed by the auditor, or they should be fully audited by the auditor. Okay, guys, let's do one thing. Let's take a quick 10-minute break, and then we'll gather up here and we'll continue further. Hello everyone, welcome back. I hope everyone is recharged, including me. Just kidding. So yeah, let's move further on the topic. Uh, Thank you, Srinidhi. Okay, I'll come upon this particular topic, Jay. What is material subsidiaries? I'll come upon because there is a detailed definition given for the material subsidiary, and I'll touch in a while. Okay. Thank you, Vidula. Ah, okay, Jay. If you read 143.12, fraud reporting, wherein it is the responsibility of the auditor, cost accountant, company secretaries, wherein they come across any of the fraud. So they need to report to the central government, and if the fraud is of, I think, less than 1 CR, the limit prescribed, they need to report it to the audit committee. It's a part of their role of the auditor. No, Jay, uh, there is no requirement of issuing any opinion or report by the audit committee. So these things are, not that much formalized. You can say, okay, audit committee needs to issue a report, but yes, it may issue a report, but that depends upon, how much review they are performing, what is the topic they are reviewing, what are the comments they are issuing, is there any format. So most of the companies, they have internal formats for, such reviews, wherein, okay, they will provide in a format what are the comments of audit committee. So in a review, the important points are review comments that are being provided, not the opinion or a report. So basically, if they will have any review comments, they will provide, okay, these are the review comments. If there are no review comments, they might state, okay, we reviewed the things, everything appears to be fine, and we are good to go. So that depends upon the underlying topic and company to company. Okay. Uh, okay. So Vidula, you are talking about non-cash transactions with directors. Okay. Now, okay, let me go back to that particular point and quickly I will explain to you. In CARO 2020, in para 3, clause 15, we were supposed to record any non-cash transactions with directors. If yes, then section 192 has been complied with or not. See, if there is a non-cash transaction with a director, okay, either by the minutes, because such transactions are required to be approved, then either in board meetings, minutes, you will get the clue, you will get the details of these transactions. These transactions are required to be pre-approved as per the provisions of Companies Act. Depending upon the type of transaction, the limit of the transaction, there are various provisions. But again, somewhere they are captured in the minutes of meeting, in the approvals, discussions of the board. So if you go through the minutes, if you go through the various minutes of meeting, the underlying documents of the meetings, you will come to know whether there is any non-cash transaction with directors or not. Okay. So we are not required to check each and every transaction, but yes, if you'll go through the documents, it will automatically come into the under your profile. So I think it's something it's already being covered in your audit scope, and I don't think so that you need to verify each and every transaction whether this transaction is with the director or not, and it's a non-cash transaction or not, like this way. Uh, Another question, Vidula, was what are cash losses? So this is relevant to para 3, clause 17 of CARO, where we are required to report cash losses in the current year that a company has incurred and immediately preceding financial year. Cash losses, as I told you, are nothing but, you can say, current year position of profit and loss. Out of that, less non-cash expense. Okay, sorry, not less. I'll add it back. Add non-cash expense less non-cash income. So that will give you cash profit. Simple. Cash profit or slash loss. So cash profit or cash loss are the things which actually I have incurred in cash. No depreciation, no provision, no any accrual of income or accrued interest, something like that. Only amount which is I have earned during the period in cash. Near to, you can say, similar to concept of the cash inflow or outflow from operating activities. In cash flow statement, there is first category, cash inflow or outflow from operating activities. Near to that. Any further doubt, guys? Good. Okay. I hope I have answered your queries. Okay. No issues. Then this was with respect to, we discussed before break, was resignations of the auditor, and the company needs to ensure the compliance to this. Other related things with related to resignations, where audit committee plays an important role. Okay. Now let's say, for example, reason for the resignation, okay, is, let's say, non-availability of the information or non-cooperation by the management. Then auditor is required to inform chairman of audit committee, okay, I am not receiving any information, or management is not cooperating with me, that's why I'm resigning. And immediately the audit committee should, without waiting specifically for quarterly meetings, should concern directly that particular matter and should resolve it. Okay. Then if auditor proposes to resign, okay, then all concerns with respect to the proposed resignations, relevant document should be submitted to the audit committee. So whenever an auditor resigns, either it's on the ground of non-availability of the information or non-cooperation or any other reason, whatever it is, inform audit committee. Inform audit committee. Okay. Once this information is passed to the audit committee has a responsibility to communicate its views to the management and auditor after thinking on it. So when auditor resigns, there can be two scenarios. One, because of non-receipt of information or non-corporation by management. In these cases, inform chairman of audit committee, and audit committee will immediately consider this. Okay. They will not wait for the next quarterly meeting, because 4 times in a year they are required to meet, but they will not wait for this thing. You need to provide the details. Okay, which were the details you asked, which were the details you are not getting, non-availability or information like this way, all the details. Now other reasons, provide documents and explanation to audit committee. Audit committee will consider and communicate its views to auditor and management. Okay. So if there is any other reason, provide documents and explanation to audit committee. Audit committee will consider and communicate its views to auditor and management. Now these are the conditions. Okay, this is conditions that are required to be complied with. Okay, and this compliance is also present in annual secretarial compliance report that is required to be certified by practicing company secretary. So that's why we are understanding what are the requirements that are required to be complied so that it can be certified. Okay, they were complied with. This is a requirement of regulations. Clear? Now, this was LODR audit committee, LODR we were talking about. Remember in the start I told you, okay, audit committee is also present under Companies Act. Now, we will discuss and see audit committee under Companies Act. There are not much provisions, but again, there are few provisions that we need to see. Do you guys remember which section we are talking about here under Companies Act? Which section? Section 177 of Companies Act plus Rule 6. I'll tell you why Rule 6. Okay. So as per Companies Act, every listed company and such classes of company are required to have audit committee. Okay, every listed company and such classes of company are required to have audit committee. When I say such classes of company, these classes of companies are all public companies, paid up share capital greater than 10 crore, all public companies turnover greater than 100 crore, and public companies outstanding loan greater than rupees 50 crore. Now remember over here, these limits, what I'm talking about over here is these limits, okay, are required to be verified based on limits should be based on last audited financial statement. Last audited financial statement available. So in the last audited financial statement, if these conditions, any of these conditions, okay, satisfy, then you are required to have a audit committee constituted. Number 2, when I say outstanding loan, okay, It's not only include loans, but includes loans plus debentures plus your deposits. Remember, loans, debentures, deposit. Okay. And okay, just a minute. So when I say loan, it is outstanding loan. Debenture, deposits exceeding 50 crores. Now, I'm not saying that from financial institution, from bank, I have not mentioned any such word because that is not mentioned in the provision also. So you are not required to bifurcate if it is a loan from bank, NBFC, financial institution, other person, etc. It only says aggregate of outstanding loan, debenture or deposits. That's it. Means every loan, debenture and deposit is considered over here. However, there is an exception to this. Exception is JV, wholly owned subsidiary, and dormant company. A JV, wholly owned subsidiary, and dormant company are not covered. So there is an exception which talks about JV, wholly owned subsidiary, and dormant companies are not covered under the provision over here. Clear? Okay. So when I say audit committee under Companies Act, so what it makes that, okay, just a minute. Okay, I'm talking about the constitution, or you can say composition of audit committee. Now, as per Companies Act, audit committee should include, okay, minimum 3 directors with independent directors forming a majority. So, minimum 3 directors, same like my LODR, but majority should be independent directors. Okay, then not only that, earlier it was said that okay, every member of audit committee in LODR should be able to read and understand financial statement. Okay, now this requirement in Companies Act is only restricted to chairperson or chairpen should be financially literate. Okay. So this was part of Companies Act. So in Companies Act, this particular thing is given that a chairman should only be considered as a like should be financially literate, wherein in LODR we talked about audit committee should be financially literate, whole committee, and at least one member should have accounting and FM, that financial management expertise. So LODR is more stricter compared to the Companies Act. Clear? Guys, I'll suggest kindly take the notes simultaneously. Reason because it will help you out, so that it can help you in revision also at the same time. So you can take the notes simultaneously also, because it will help you to understand the things. Okay. I'm just, pausing for a bit for each and every notes. If you want to, just take the notes, or if you at a later stage, if you want to refer to these notes, you can refer it. So I'm just pausing a bit on each and every portion, so that at a later stage, even when you are watching the video, you can pause it and read the whole notes. So from here we started, and this is right. Yeah, clear. So this was about the audit committee under section 177 of the Companies Act and Rule 6. I hope I'm clear. Okay, then functions of audit committee. 177 subsection 4 talks about functions of audit committee. Okay, that is section 177 subsection 4. Now, what are the functions of audit committee? If you understood the functions of audit committee in LODR, it is on the same line, because the logic is same. It can be, LODR might have more functions, or a company sector might have a lesser function, but still, see, first, recommending appointment of state auditor, review auditors, independence. Okay, then examination or review of financial statement, approval of subsequent modification of transaction with related party. Okay, so whenever related party transaction comes, section 188 or other provisions are also simultaneously applied. Review of inter corporate loan, review of valuations, evaluate IFC, internal financial controls. Okay, evaluate, not evaluate, sorry, monitor the end use of funds raised in issue. So whatever funds are raised, monitor whether the funds are used for that particular purpose or not. Okay, so that was the role and function of audit committee. This is much shorter compared to the role we saw over here, so many points, but these points are same, which are part of this particular part C, subpart A of schedule 3 of LODR. So these are also present in LODR. Okay. Then same way, audit committee may comments upon the auditor internal control auditors about internal control system, scope of audit. So audit committee can call comments of auditor on internal controls. Okay. Scope of audit, observations, review of financial statement. Okay, so these can be called comments, can be called on these topic: internal control, scope of audit, then observations, review of financial statement. Okay, any other thing as maybe they deem appropriate. Okay, then audit committee can investigate also, can investigate any issue or any matter related to above mentioned items. So BOD's report shall have composition of audit committee in company. Okay, BOD's report shall mention the composition of audit committee. Then there are a few more provisions that every listed company or classes of company shall establish a vigil mechanism. Same like we saw which are the classes of companies, so they are required to establish a vigil mechanism. Establish vigil mechanism. Okay. So establish a vigil mechanism, and they are required to. So once you establish a vigil mechanism, audit committee will review this mechanism. Audit committee will review this mechanism. This includes that adequate safeguard should be present for whistleblowers or against victimization of person who are reporting any issue. So today, let's say if I whistleblow, if I say there is something going wrong, I am part of the company, and tomorrow company, in retaliation, removes me from the job. Some retaliation happen, or I'm being punished for, blowing the whistle. Then it's a victimization of person. Then adequate safeguard should be present, and audit committee should review these safeguards. Okay. Clear? Now, this was under company set. However, we saw part C, subpart A under Schedule 3 of LODR. There is one more part over there. That is part C, subpart B of LODR. Okay. Now, why I am discussing in detail is reason because roles and responsibilities of audit committee and roles and functions of audit committee are very important to understand in order to ensure that these roles are complied with and the compliance to the LODR is being done or not. Okay. I'll just write it here. Earlier, guys, I mentioned Schedule 3 over here by mistake. It is Schedule 2. Apologies for that. It is Schedule 2 of LODR. Okay. So now part CB of LODR, Schedule 2 of LODR specifies certain things which are required to be, reviewed by audit committee. This is a mandatory part that is required to be reviewed by audit committee. If you read the part A, it says the role of audit committee shall include. Now these are the documents that are required to be reviewed by audit committee. To be reviewed by audit committee. Okay, these are things which are required to be reviewed by audit committee, and these are of greater importance. I'll say greater importance. First, management discussion analysis of financial condition, results, and operations. So what they are required to review is management discussion and analysis of financial condition. Okay. Second, statement of significant related party transaction, okay, as defined by the audit committee and submitted by the management. Now, statement of significant related party transaction is something newly added and with effect from 1st April 2022. This is also an amendment. Third, management letters, okay, on internal control weakness. Issued by the statutory auditor. So, if any letters have been issued by statutory auditor to management on internal control weakness, then these are required to be reviewed by audit committee. 4. Internal audit report. on relating to internal control weakness. Internal audit report on internal control weakness. Fifth, appointment remuneration of chief internal auditor. Appointment, removal, terms and conditions, terms of remuneration, I'll say. Terms of remuneration of chief internal auditor. Okay. Then very important, statement of deviations. Why important? Reason, because statement of deviation is something required to be submitted by company, and these are the quarterly and annual statement of deviations. Okay, so these are very important one. Statement of deviations. Now, which deviations we are talking about? Quarterly statement of deviations and annual statement of deviations. So when I say quarterly statement, that quarterly statement is related to your utilization, or you can say annual statement of fund utilized for the purpose and other those offered. So these are the statements which talks about utilization of funds. So statement of deviation, quarterly statement and annual statement. Okay, so these are the things which are required to be reviewed under part CB of schedule 2 by the audit committee, and this is a compliance that required to be certified, okay, whether audit committee has reviewed these things or not. Clear? Any doubt? Any doubt till now? Any doubt? Okay, I'll provide a quick short form over here which will help you to understand or remember this particular part, which is MMSSIA. M stands for, both M are for management, both S are for statements, and IA means your IA report and internal audit terms. So internal audit. Okay, so when I say management, you are required to see management discussions and management letters. When I say stat, okay, statement, this is statement, then there are two statements that you are required to see, RPT and deviations. And when I say internal auditor, okay, what are you required to see? Internal auditor report and appointment and terms and conditions. Report and terms and conditions of appointment, removal, remunerations. Okay, management, statement, internal audit, three things. MMSSIA. Clear? This is a short form for part CB of schedule 2. Okay, it might help you to understand and remember this particular thing. Any doubt? Yes, at any point in time, paid up capital or turnover. So good question. So question is whether for the audit committee classes of company in rule 6, whether this particular point, I'll come to that, like all public paid up share capital, paid up turnover, outstanding loan are at a point in time or cumulative. So answer is a cumulative. Thank you, Vidula. CJ, auditor is not required to generally in case of audit, but in case of a compliance certificate, yes, he is required to review or he is required to see whether the work or whether the roles and responsibilities of audit committee are appropriately fulfilled or not. So it may not involve review of work of audit committee. Let's say, for example, audit committee has reviewed something and issued a review comments. Auditor will might not go into the detail whether the audit committee is appropriately performed, but he will check whether the review has been done or not. There's a difference. I'm not going to question the accuracy of the review, but I'm just going to question the existence of the review. Okay? I hope it is clear. Okay. So we discussed audit committee, we discussed roles and responsibilities of audit committee, LODR, and on the other end company set. Now the next point that we are going to discuss is composition of board of directors. Okay, why? Because these are the requirements of corporate governance. Now corporate governance says that okay, this is how the audit committee should be, this is how the board of directors should be, and the board composition should be. So we need to verify whether these requirements are met or not, whether the board of directors are constitution of that thing or not, like this way. So you are required to verify when you are issuing a compliance certificate or certificate on compliance of conditions of corporate governance. Okay, so you need to verify whether these requirements have been complied with or not. So what I'm going to discuss now is composition of board of directors. Composition of board, you can say. So it falls under regulation 17 and 17A of LODR regulation. Now, as per the LODR, what composition should be? LODR says that okay, throughout the reporting period, okay, the board should have these following things. First, if it is a top 100 listed or others, I can say. If it is top 100 and listed, then it should have one woman independent director. Okay, one woman independent director. Then 50% of BOD should be non-executive directors. Okay, if it is top listed 100, if it is other companies, then 1 woman director and 50% of BOD should be non-executive directors. Now I'll say what is the difference between them. The difference between them is this word. This word is a difference. In top 100 listed companies, I'm saying woman director should be independent, whereas in other companies, I'm saying there should be a woman director at least. But I'm not specifying the condition for the independent. Okay, so these are the conditions for the composition of board of directors. Now, is any of the non-executive director out of this 50%, special resolution is required okay, if this non-executive director, any of this non-executive director is aged more than 75 years. Okay, now plus this special resolution should have statement, okay, and justification for appointing. Statement plus justification for appointment of such person as a non-executive director. Okay, so this is the composition of board. Now there is also limit on the number of directorship, ceiling on the limit of directorship. So as per regulation, okay, as per regulation, directors of listed entities, okay, directors of listed entity shall not be director in such classes in such specified number of companies, maximum directorship, that is maximum directorship they can hold. Okay, so what is the criteria is for maximum directorship? First of all, you need to understand which type of director it is. Full-time director, managing director, okay, or you can say independent director, which is not a more than which is, you know, just normal director or independent director. So full-time director or managing director. Then it comes independent director, others. Okay, now whole-time director or managing, let's say from start from others. Now for others, the limit is 7 directorship. So a director should not be more than director in 7 listed entities. I'm talking about listed entities over here. Why listed entities? Reason because we are discussing LODR. LODR is only applicable to listed entities. We just saw in the start of the lecture, and hence I'm talking about listed entities. Okay. Second, independent. For independent also, same 7 directorships. Now, for serving as a whole-time director, managing director, uh, if he's a whole-time director or managing director, then he cannot be independent director in not more than 3 listed entities. Okay, 3 directorship. So this is how it should be. Okay. Now this was the composition of board and this was the number of directorship we were talking about. I'll pull it down. Okay. Now we saw composition of boards based on woman director or non-executive director. But there is another point to the composition of board, that is independent directors. Okay. Now continuing this, chairperson of board can be a non-executive director, can be a regular non-executive director, or can be like non-regular executive director. Means not a regular non-executive director. So now we are talking about chairperson of BOD. Okay. Now chairperson of BOD either can be your regular non-executive director. Okay. Either it cannot be like it will be not a regular non-executive director. Okay. There can be 2 things. Either he can be a regular executive director, or either he can be a he cannot be a regular executive director. Means he will be non-regular or executive director. Okay. Then if he is a regular and executive director, then I am required to check whether promoter, he is a promoter or related to promoter, or if it is not, means others. Okay. Now if chairperson of a board of directors is not a regular non-executive director, if he is not a regular non-executive director, okay, then at least half of BOD should be independent. At least half of BOD should be independent. If he is a regular and non-executive director, then I'm required to check whether he's a promoter or not. If he's a promoter, okay, if he's a promoter now or related to any promoter or person occupying management positions at the board level or at one level below of the board level, then at least half of the board should be consist of independent directors. So I'll do one thing. Take this, bring it to here. Yes. Okay, and others. Okay, now if promoter or related to promoter, if regular non-executive director is promoter or related to promoter, then again at least half of the board should be independent. At least half of the board should be independent or made up for independent directors. If not, then 1/3 of the board should be independent directors. Okay, this is about chairperson of BOD. If chairperson of board of directors is a regular non-executive director, then I'm required to check 2 conditions. whether he's a promoter or not. If he's a promoter, half of the board should be independent. If he's not a promoter, then 1/3 of the board should be independent. Okay. Number 2, if he's not a regular non-executive director, then at least half of the board should be independent. Again, clear? Any doubt till now, guys? I'll take a pause, see the notes, and if you want, you can at a later stage review the notes for for your reference by pausing this particular point at a lecture. This is composition of board that we discuss about: 1 woman independent for listed 1,000, and for others 1 woman director, 50% executive or 50% non-executive. And if non-executive is aged more than 75 years, then special resolution plus statement and justification. Composition of board. Any doubt? Any doubt, guys? You might be seeing a lot of information, but guys, try to understand these are the compliances that a company is required to adhere to. A company is required to comply with these regulations in order to be efficient on corporate governance. Reason because what is corporate governance? Corporate governance means following best practices, ensuring that the board of directors, audit committee, or the structure of the organization or the activities that the organization is taking, okay, or the governance of the organization is in the interest of shareholders. So if you see the corporate governance, it's made about corporate and governance. Governance means whatever activities, whatever managing of affairs, either composition of board or activities performed by board, composition of audit committee, activities and roles and responsibilities of audit committee, whatever governance activities are there or things related to governance in a corporate should be in the interest of stakeholders. That's the corporate governance. And when we are checking the compliance to the conditions of corporate governance, we need to also check, okay, whether these conditions are fulfilled or not. Any doubt, guys? Any doubt? No doubt? Okay. There's a logic behind each and every section. There's a logic behind each and every regulation. Let's say, for example, number of directorship. If a person becomes, independent director at more than 7 companies, then it may happen that, okay, he's not able to devote his time in so many companies. So today, for example, I am independent director in 100 companies. Is it possible for me to be present in the meeting of each and every 100 company, to be in participation of those 100 companies decision making? I am the director. I should provide my opinion. I should provide my comment. I should be part of the board meetings, should be taking a decision. If I'm part of 100 companies board, then is it possible for me to reach at 100 companies? So these number of these regulations increase corporate governance, increase participation, and ensures that, okay, whatever decisions are taken, whatever activities are being performed are in the interest of stakeholders. Okay. Now, one more thing that I will add up over here is, if company is having superior rights equity shares, okay, if company is having superior rights equity shares, okay, then half of the board of directors should be independent. Again, half of the board of directors should be independent. These are the things the auditor is required to check for the compliance. I hope I'm clear. Okay. Now, this was with respect to composition of board of directors, number of directorships. Now we will talk about remuneration of directors. Okay, regarding remuneration of director, again it's a part C of schedule 5. Now this is for LODR. I'm talking about as of now LODR. I'm done with the company section 177 over. I'm not discussing that again. I'm now on to the LODR. Okay. Now these are the disclosure requirements regarding directors remuneration. Remuneration of directors, disclosure requirement. Okay. What I'm required to disclose with respect to the director's remuneration. First of all relationship or transactions of non-executive director with company, all relationship of non-executive director with company. Okay. Then criteria of making payments to non-executive director. To non-executive directors. Okay. Third, in addition to this, or requirement under company sec, the following should be reported. So additional requirements, which includes remuneration package of directors. Okay. Then you need to summarize under salary, benefit, bonus, stock options, major heads. Remuneration package of director in major heads, you can say. Then detail of fixed component and PLI. PLI stands for performance linked incentives with performance criteria. Okay. Then service contracts, terms and conditions of service contract, notice period, servants fee, terms and conditions of service contract. Important terms I'm talking about. Fourth, stock option details. Okay. Now, these are required to be reported under which head or where. These are required to be reported under section of corporate governance in annual report. Okay, these additional requirements are required to be reported under the head of corporate governance in annual report. This is also be required to be disclosed in annual report. Okay, this is required to be reported on website plus annual report, and this is required to be reported on the section corporate governance and annual report. So these have a different sections and this has a different section. Clear? This was the disclosure requirements for remuneration of directors. Any doubts? Any doubts till now? Okay, no doubts. Then what I'll do is let's take one question and to understand whether this is just to give you a clarity. Let's say, for example, composition of board. Okay, now top listed 100 companies required to have one independent woman director. 50% of board is non-executive director. Let's say Mr. A, practicing charter accountant. Okay, stat auditor of, let's say, CDE Limited, who is listed on NSE. Listed on NSE. Okay, while doing the stat audit, he identified BOD composition is total, let's say 10 directors. Not 10, I'll say 11 directors. Total 11 directors. Out of these 11 directors, 7 are executive directors. 4 are non-executive. Chairperson is also executive director. Out of these 11 directors, okay, out of these 11 directors, again, 4 which are non-executive are independent, and rest of 7 are, let's say, not independents, are others. Okay. Chairperson is also executive director, means he's not independent. Okay. Now you tell, now Mr. A identified these things. Just a minute. Mr. A identified these things, understood, fine. After identification, what Mr. A did is, Mr. A qualified his audit report on account of non-compliance with LODR regulations. Okay, he qualified his audit report on account of non-compliance with LODR regulations. You tell me whether this is appropriate or not. This is appropriate or not. Let's say these corporate governance guidelines are applicable to this particular company, CDE Limited. So you tell me whether this is appropriate or not appropriate. Simple. Come on, guys. Pretty simple. Whether this is appropriate or not, and how it is required to be reported. If any non-compliance to the LODR regulations is there, the auditor qualified his audit opinion. Is it appropriate? Come on, guys. Come on. Pretty simple. This is a structure of BOD. Okay. And auditor has qualified on basis of this structure his audit report. Come on, come on. Is it appropriate? Come on, guys. Okay, good, good, Sairam. So, Mr. A is appropriate or not in his audit report? Jay. I'm asking Mr. A is appropriate in his audit report or not. So the question is reporting by Mr. A, the practicing chartered accountant stat auditor of CDE Limited. Has he reported appropriately or not? Jay, Siva. So has he reported appropriately? Come on, guys. Okay. Okay, Jay. Okay, Vidula. Okay. So, so if you are saying that the qualification is appropriate, in the start itself, I said very clearly, this is neither an audit, not an expression on financial expression of opinion on financial statement, neither assurance, neither any effectiveness or efficiency of management. Now, if there is a non-compliance with the LODR regulation, it may and may not impact your financial statement. How? I'll tell you. This is a non-compliance, okay, with LODR. The possible effect of non-compliance can be penalty or fine. So if a qualification is on the penalty or fine plus non-compliance, okay, penalty or fine will have a financial impact, financial statement impact. So if a penalty or fine is mentioned in the qualification for the non-compliance, that the management has not considered the penalty or fine, there will be a law, there will be a non-compliance. Remember, there is a standard on auditing which talks about considerations of laws and regulations. Remember something? There is a standard on SA 250, considerations of laws and regulation in audit of financial statement. Something, remember? So if, while auditing, if we have identified, okay, this is a non-compliance and the impact of the non-compliance will be material. Okay. If the effect of the non-compliance is material, then you need to disclose and you may qualify if the management has not provided, let's say, for penalty or something like that. If the management has already provided for the penalty or fine, and if there is a non-compliance, then if management has reported the non-compliance in financial statement, then this qualification will not be required. If non-compliance is appropriately reported. See, these are the compliance with the LODR. if my board of directors is not structured in this way, if it is not compliant with the LODR requirement, then either at maximum I can, the company can be fined or a penalty can be imposed. Agreed? Okay. For the fine and penalty, I can qualify. For the fine and penalty, if management has taken the provision, then it is fine. Directly, I cannot qualify because there is a non-compliance. No, I need to check the impact of the non-compliance, and then only I can, see whether it is material enough to qualify my audit report or not. So only non-compliance will not lead to a qualification. You need to see SA 250 plus you need to see impact of non-compliance. On financial statement. Just that my independent directors are not appropriate or my non-executive directors are not as per the regulation is not a valid ground for the qualification. You need to see these two things. Then only you can justify the non-compliance. I hope it is clear. Guys, are you understanding? Did you understand this particular thing? Let's say tomorrow it is said that, okay, board of directors, or sorry, audit committee is required to meet 4 times in a year. Now they have met 3 times in a year. There is a non-compliance to the regulations. Agreed. To the extent there is a financial implication of penalty or fine, I can qualify after even validating the impact of the non-compliance. Whether the impact of the non-compliance is, what is the impact of the non-compliance? But again, if the management is appropriately disclosed, if the management has appropriately provided that thing in the financial statement, then I don't have a ground to qualify when there is a non-compliance. So you need to understand what is the disclosure by management, what is the impact on financial statement, and SA 250. Clear? So you need to understand, okay, non-compliance with LODR, what is the possible effect? Then whether there is a penalty or fine of non-compliance. Then you need to check SA 250 impact of non-compliance, and then only we can qualify. Understood? Vidula, Jay, Shiva, Sairam, Srinidhi, did you understood? Did you understand the thing? Okay, good. Thank you, Srinidhi. So guys, what we'll do is we'll keep till this point for today's lecture. Okay, in next lecture we'll continue this topic and we will start then consolidation of financial statement once this topic will get over. I'll highly suggest read as much you can. Read before the start of the lecture, coming into the lecture. Reason because you will be able to understand the things which we are discussing. You will be able to correlate, you will have your questions ready, and it will be very appropriate, for the understanding point of view. Also, provide the feedback. Please provide the feedback. Very important to us to understand where we are going, where we need to go, and what you need additionally. So please provide your feedback on mobile app, on the portal, or the mobile app also. Okay. So that's it for today, guys. Thank you being participative. Thank you for attending the lecture. Thank you very much. Yes, sir.